What's up you guys? I'm doing a second video today, and why does Donald Trump want negative interest rates? Okay, first of all, we need to understand the mindset of Donald Trump. What is his mindset? He's a real estate investor, a commercial real estate investor, and he's a business owner. You need to understand his psychology to understand why he wants negative interest rates. So first of all, the question, when you're a real estate investor and then a business investor, the first thing you're looking at is, the first question you're looking at is the WACC. So what is the WACC? The WACC is the weighted average cost of capital. And essentially what it is what investors want, ROI, and the cost of debt, interest. These are the two questions, because when you structure a business, essentially, what are you investing? You're investing capital and you're investing debt. Debt is essentially money. When Donald Trump looks at a balance sheet, what he's looking at is how much does the capital cost. When he's looking at interest rates, say the interest rates are at 3%, what happens when interest rates are at 3% is that the asset needs to produce more to satisfy investors. If investors are looking for a 15% return and the debt is at 3%, let's just look at this example. If interest goes down to negative interest rates, it's possible that people who take on loans will have a 0% interest. So what is that going to happen in this example? Let's just say that you use 80% debt and 20% equity for 100% assets, okay? So now, in this example, we have 20% times 15%, which is around 3% plus 0. Because I just said if negative interest rates goes down to minus, and then you have 0 on your interest, this means that you need a 3% yield to make money. So essentially it is a PE ratio of 33 times. So in the first example, we had 80% times 3%. We probably had a 5%. So that means that the investment needed to do 5% return. And now it only needs a 3% to get 15%. In this example, the asset needed to produce 5%. Or in PE ratio, it was a PE of 20. So as you can see, when interest rates starts to go down, and at a certain point if the interest is negative, then you can have a PE of 100. What does this do to assets, financial assets, stocks, bonds, everything? What happens is this creates a massive bubble. Like, people say that we're in a bubble right now. If we're going into negative interest rates environment policy, it's going to create massive bubbles. We'll be seeing P ratios of 100 in real estate. We'll be seeing P ratios in stocks. We're already seeing it in some stocks, but it's going to balloon it even more. As we can see, fractional reserves, the fractional, when you're buying stocks at a fractional rate, we're already seeing these massive swings, this massive speculation, because you could buy a fraction of a share, okay? So this is why Donald Trump wants negative interest rates. If we go into a negative interest rate environment, these assets, anybody who owns assets, these assets will balloon. So this means that it will increase by almost 50% in value. If Donald Trump or me, whatever, anybody who owns real estate, if you have $1 million of real estate and it goes up by 50%, then you're at 1.5 million. And as you can see, this creates a lot of wealth for people who own financial assets. If you don't have real estate, if you don't have stocks, if you don't have anything, then this is going to hurt savers. Anybody who's trying to save money and get a return on their money, they're not going to make money in this system. And they can't do NIRP until they have a digital currency. You need a digital currency to make this system function. Because imagine, if you go into a negative environment, that means all the money that you have in your bank account, you have to pay the bank to store the money. So what are you going to do? You're going to pull out into cash. Now, if we do a digital, or the Fed does the Fed coin, then it will be practically impossible to take out your cash, and they won't have any runs on the bank. So if it's impossible to go into cash, or it's still possible but it's not worth it, or it costs too much, then you're going to keep your money in the bank and you're always going to make it work. You're either going to pay off your debt, you're either going to buy more financial assets, more real estate, and you'll be making that money. But as long as the digital currency does not exist, NIRP will be practically impossible. So that's why I have a feeling that they're working very hard to implement this new digital currency. Now, for every dollar, okay, so the PE ratio, essentially what it's stating is that for every dollar of net operating income that you create, in this example, it's worth $20. So you have a multiplier by 20. And if you go to this example, it's creating $33 in value. So sales and anything that you're doing, essentially you're creating 33 times the value of that money. You don't have to save that money. What's happening is that you're creating wealth. Nobody saved this money. Essentially, the reason why it was created is because the net asset value, the newly asset value added, was $500,000 because the cost of capital went down by a lot. Okay, so this is why Donald Trump wants negative interest rates. They can't do it until the digital currency is there, unless they do it anyway, and it's not going to work as they want. As soon as they do the digital currency, then they can do NIRP, and then you could see zero interest. So essentially, you're printing money. The more debt that you use, the more money you have, the more wealth that you have. And anybody that's not using this will be practically impossible for them to acquire wealth. So if you like this kind of information, like, subscribe, and I'll be seeing you on the next video.